Many, many moves from the investment committee. Josh Brown, we start with you. We're looking at tech, and you sold AMD. It's just been straight up since you bought it over the last few months, so you're out.
Yeah, so I put it on Halloween, and the stock's up. I think I was up like 87% in the name. This is one of the biggest winners of the last few months. I was lucky enough to be in it, but I'd never owned a lot of it. It was not a core position. I'm definitely not enough to take a victory lap. But keep in mind, this is a stock that's up 81%. I also own Nvidia. In that same period of time, it's up 51%, and Nvidia is a core position of mine. I have much more exposure there, and I just don't want to own both. I look at things like RSI when I make a decision of if a stock is too hot. AMD hit 78 relative strength index. It's 33% above its 50-day moving average. It's 60% above its 200-day moving average. When people come on the air on this network and others and say, oh, it's overbought, usually what they mean by that is I missed it. What I mean is technically it's overbought, and I'm using RSI and percentage above the major moving averages. The stock has been up 61% of all trading days since I bought it, an average daily return of 1%. That is just absolutely ludicrous. It can't continue. I'm not saying the top is in. I'm saying no mas for me. I have too much exposure. I want to talk about semis in general. They're now 8% of the S&P 500. 3 years ago, they were 4% of the S&P 500. And how about this? They're the same size. Look at Nvidia, 3.6% of the index. It's as big as the entire energy sector, which is 3.7%. It's bigger than materials. It's bigger than real estate. Nvidia, one company. So that's where we are with semis, and I just want to have a little bit less exposure. So congrats to Lisa Su. Congrats to AMD longs. I'm out. Maybe I'll see you later at lower prices.
You got an AMD long sitting next to you. Not quite as long as you were, though, because you've trimmed this stock as well. And by the way, you did trim Nvidia, too.
I did.
Tell us.
I did. I think Josh made a really great point. You look at these two together. They became our number 4 and 5 position, weighting together about 12% of the portfolio. And this is just prudent portfolio management. Here, I think the really big takeaway here is earnings are coming up. And basically what we saw over the last month and a half was an earnings beat. Now we get to go into earnings without taking all the risks. So I'm peeling these back a little bit, be able to watch it. I think the story with the chiplets, what AMD has done, is amazing. I don't think it's going anywhere. They're going to eat into a little bit of Nvidia's business. They've already taken Intel's business. I mean, the stories will continue to be there. The revenue that's going to continue, I think, is going to meet expectations, potentially beat. But you look back at Nvidia's earnings report in August. It beat expectations. What did it do afterwards? Nothing for 6 months. So what I'm thinking right here, and I've been waiting for this rotation more broadly, like, are we going to see it? Everybody thought I was going to start the year. Now is the time. We're looking for that blow-off. It doesn't have to be a top, but a blow-off run that then now we consolidate for the next few months. AMD and Nvidia may not do anything, and just for that RSI point, not sell off, but then the RSI just kind of comes down, and then they're ready for the next run.
You could have a great company, but not a great entry price on a stock. Like, that's something that we sometimes lose. We get so excited about product launches and competitive advantages and chips and software platforms. It's also important to remember these are investments, and not every price is always the right price. So I agree with what you did. I think I agree with what I did. If they come out and report earnings and the stock's up 20%, I feel like I could live with it. Like I won't be thrilled, but I don't think I don't think I'm going to be in a monastery the next day.
Seeing, for the viewers, they are number 9 and 10 now, turned about 30%, just to get granular than that.
Yeah, no, I appreciate you getting as specific as possible. Obviously, I know our viewers do as well. We're seeing those stocks certainly come off their best levels of the session. It does, Steve Weiss. It's nice to see you. Hope you're doing all right. It does speak to these questions about exuberance and froth. And, look, even some of the most bullish market watchers like Ed Yardeni have written notes lately and told me yesterday on Closing Bell, maybe you do have this exuberance building and building and building. And it may not end badly. It might. But maybe we're in the stages of that. And I feel like these two gentlemen to my left are speaking to that and the way that they've moved around their stocks.
Yeah, I think about that every day and multiple times a day. I take a look at AMD, and by the way, the best trade in AMD is a friend of mine, Mitch Hawes, was head of IR at Skyworks and moved to AMD in May of 2023. So think about what a great trade that was. And he's just one of the smartest people out there on the IR side. But I do have that question, but at the same time, I think that the advances continue to be narrow. I hate to say this because it's never really true, but has the market become less valuation sensitive, almost valuation agnostic, and looking completely at execution and opportunity? And, I go back to what I've said multiple times, which is that perhaps we have a new class of investor. Now, at the end of the day, some things do change, but most things stay the same cycle after cycle. But even if we do fall off, the way I'm looking at the market right now is that the base case has shifted from, despite what Goldman says and some others, from their view that there's going to be a March cut, to cuts in the second half. The news is there will be cuts. So now the market's adjusted to that. If we do, in fact, get cuts in the first quarter or even early in the second quarter, then I think the market can continue to go. The Fed has really threaded the needle. So you've got an economy that's exceeding expectations, as we saw by GDP. Sure, some numbers are still coming down. Durable goods wasn't a great number, but it was definitely a good enough number. So look, it's lining up. And the only thing it could monkey up the works, really, is if inflation numbers, and we'll see a number tomorrow, reverse. But I don't see that being the case. So the bottom line is that I'm more worried about the market than I've been because of the enthusiasm that we've seen. Stocks going up. I mean, you've got Meta going up 1% a day. It's $3, but that's a lot. But it's only, it's 1%, and that's just not normal, nor is it sustainable. So Josh had a phenomenal trade, and I applaud the portfolio management of taking some off the table. You always got to leave some for the next person to come in with.
I know you just said you're concerned around the market about the market because of the enthusiasm. Right. I think that's the words you used, but your actions seem to show that you still believe that these kinds of stocks are going to go up because you added to Taiwan Semi and you added to the Qs. So the points of alleged froth or potential froth are places that you're still investing.
Yeah. So when you asked about what do you think is going to work next year, and for me it was the same thing that worked last year, the mega caps. I don't think you see another 100% year because they're not coming off lows. They're coming off highs. But yet I still see issues with the industrial stocks, frankly, because while we may not go into recession, that's not looking like we're going to. We're still slowing, and rates are still going to have an impact. You can't go from 0 to 5% without an impact. So you're still seeing that. So where's money going to go to take advantage of the market? It's going to go into those companies. So while I admit that perhaps I'm overpaying slightly for Meta this year and Microsoft and where they are, as I look out a year, 2 years, 3 years, they are the winners. And there are very few companies that are like that. In terms of Taiwan Semi, excuse me, Taiwan Semi's in the driver's seat. Taiwan Semi, when you think about how overlooked it was until the last quarter, Microsoft, they want to build AI chips. Who's getting the order? Taiwan Semi. Apple, who's getting the order? Taiwan Semi. Nvidia, we heard Jensen Huang say, I've got to get more capacity from Taiwan Semi. So Taiwan Semi has pricing power, and they've got limited capacity. So while they're building a new fab in the U.S., it's going to take a while. So Taiwan Semi, to me, is the best away from what we see with Nvidia and others, will be one of the best performers out there. So that's why I added to it and why it's a very large position. My concern with Taiwan Semi had, of course, been China. But as she has seen that all the rhetoric, which he's trying to back off of, has really killed his market and is killing his economy. So any move on Taiwan is not going to happen. And despite the fact that Taiwan Semi has substantial properties and manufacturing facilities in China, I just don't think Chinese government can move on them. So I'm comfortable with it.